in continuation of the industrial financial institutions, the most important institution is the Industrial Financial Corporation of India, which was established in 1940 with its headquarters at New Delhi. So this is the first such institute established like a bank to fund the small, medium and as well as the large scale entrepreneurs in the industrial sectors. Then in the 1993, IFCA was converted into the IFCA Limited with the equity participation and all. And recently there was a number of moves were made by the government of India to merge with the Punjab National Bank as well as with the IDBI, but yet the merger was not taken the shape. So this is one industrial financial corporation which will lend the money say to the industrial entrepreneurs. And the next one is the ICICI Industrial Credit and Investment Corporation of India Limited, established in 1955 with its headquarters at Mumbai. The difference between the previous institute and ICICI is that while establishing so, this ICICI was primarily meant to lend the industrial entrepreneurs in terms of the both domestic rupees as well as the foreign exchange currencies. So this is one of the important highlights, as I told you, the foreign currencies. Then the lending division was made and say in the 1996 the ICICI Bank was established after the economic reforms, and the two ICICI lending divisions and the banking divisions, they are merged say to form the ICICI Limited, and this is the first universal bank in the India in the private sector also. Universal banking. What is the universal banking here? Universal banking concept was proposed by the Sardar Khan committee, where all types of lending activities, housing, insurance, personal banking and credit and deposit collections and all will be only at one place. This is known as universal banking, strongly recommended by the Khan committee, Sardar Khan committee, and the same was implemented here. And the other bank which has followed the universal banking is the IDBI. IDBI, known as Industrial Development Bank of India, established in 1964 with the equity participation of most of its RBI, lending the financial, but in the 2004 it has converted into the IDBI Limited. So that is a bank was formed where it was registered as the Indian Banking Act 1949 and performing the banking divisions also in spite of that. While the IDBI, though it is not the completely an nationalized bank, it was treated as the other nationalized banks in India. IRCI, Industrial Reconstruction Corporation of India, 1971 with its headquarters at Kolkata. Now the name was changed say to the Industrial Reconstruction Bank of India in 1985. And again the bank name was changed into Industrial Investment Bank of India, IIBI, in 1997. However, so there is a move say to sell the equity shareholders say to the number of financial institutions, but yet it has not took the major form. So these are the developmental financial institutions. As I told you, the structure of the banking, where we have discussed scheduled banks, non-scheduled banks, scheduled commercial banks, scheduled cooperative banks. Then within the commercial banks, nationalized banks and the private banks, within private banks, Indian private banks and the foreign banks, and the other one the RRBs, the cooperative banks, and all we have discussed the Exim Bank, the National Housing Bank and the other developmental financial institutions. So after this as a part of the economic reforms, now we have even introduced the economic reforms even in the banking and financial sector, and as a part of the financial sector reforms, Narasimhan Committee 1 was formed say to recommend the financial committee reforms, and this committee has submitted its report in 1992, and the most important recommendations are the SLR and CRR, which are the very important. These SLR and CRR are going to be reduced. Why? Because to perform the business activity, the SLR, which is used to be very high from 38.5, and it is reduced, and the committee recommended it to reduce it to 25%. And the other important recommendations include reduction of the CRR from the 3 to 5%. So the CRR 3 to 5%, so that is 3 to 15%. Hitherto CRR varies above the 3%, above the 15%. Now the CRR was reduced from, he strongly recommended only to range from the 3% to the 15%. And priority sector lending, which forms the most important part of the bank lending activities, public sector banks, small entrepreneurs, farmers and others. It is generally priority sector lending is 40% of the total amount of the lending. Now this committee is recommending only set to the 10%, and the level and the structure of the interest rates. So what is the various interest rates for the various deposits and lending activities? Generally it should be determined by the market forces, not by the government or the RBI. So this is another recommendation. Then importantly, it has submitted a recommendation known as the merger and acquisitions. This committee has strongly recommended to merge 3 or 4 banks, large banks which are running under profits, to form into the one bank or the performing the banking of international activities, and the remaining banks should be allowed to perform the banks of the national character, and the other important banks besides these 3 to 4 and 8 to 9 banks having international character and the national character, the other banks should cater the needs of the local sector. Then so there is a license system which is prevailing in the establishment of the banking. The license should be liberalized, and while establishing the bank branches also, this committee has strongly recommended. Further, the committee also recommended the liberalization with respect to the entry of the private sectors into the banks. Thereby, as I told you, the new private sector banks have entered into the Indian economic system after 1993. And the committee has also recommended there should not be any difference in treating the public sector bank and the private sector banks. And with regards to the non-performing assets, what is a non-performing assets? An deposit or an asset where the principal or the interest has not collected for this successive period of 3 months, this will be regarded as a non-performing asset. So in the public sector banks, NPS is the big problem, where the NPS is a dead capital and the unproductive capital, and the Narasimhan committee has urgently recommended to reduce the NPS. This committee has also made the solution that there should be an asset reconstruction fund where such bad debts will be transferred at the discounted rates to the ARF, and then the ARF will collect the debts from the borrowers. And besides this, it also recommended the multiplicity of the institutions control on the banking system. On one side there is a finance ministry control, and on the other side there is a RBI control. Narasimhan committee has strongly recommended that let there be a control, one control primarily with the RBI. Next is the measure of this Narasimhan committee 2. Again it is formed in the 1998, but this time it is exclusively on the banking sector. So in the examination point of view, one has to remember that Narasimhan committee 1 was formed on finance sector including banking sector. With respect to the Narasimhan committee 2, the committee was formed on exclusively banking sector reforms, and more or less this committee has recommended merger of the strong banks with the strong banks only. It strongly against the merger of the weak banks with the strong banks, because the reputation and the credibility and the assets of the strong banks may be in a difficult position. Why? Because if the weak bank will merge with the strong bank, the staff problems and the credit problems and the asset problems may arise. Instead, weak banks, to avoid the further weakness, these banks should practice the narrow banking. What is the narrow banking? Narrow banking is the banking practices system where the lending and the deposit activities will be with utmost care and with utmost security, where the element of risk will be always zero. Such type of narrow banking practices can be practiced by the weak banks instead of merging them with the strong banks. So it also recommended the same, but it also reduced the number, as the Narasimhan committee 1 said that at least 3 to 4 banks should have international character. Now this committee is recommending only the 2 to 3 banks, and the 8 to 10 banks of national character, and the other banks should have the local character. And this committee, Narasimhan Committee too is also recommended to review the existing banking important acts, RBI Act 1934, Indian Banking Act 1949 and the SBI Act 1955. And the banking committee has also recommended the other important recommendations, that is in the recruitment process needs to be reviewed, and there is a need for the latest training to inculcate professionalism. See, instead of the financial and management graduates and all, so there is an every need to inculcate professionalism. For a field officer, agriculture, and for a information technology officer, a engineering background is required, and for a veterinary banking finance, a veterinarian is required. Likewise, it was strongly recommended a professionalism in that. And depoliticalizing of the bank boards, particularly the boards of the various national sector banks are always with political interference linked to the poor quality management systems. So all these systems should be controlled by depoliticalizing the bank boards. Then the integration of the non-banking financial institutions, particularly the NBFCs, and all activities should be integrated into the financial system. They should not be treated, they should not be viewed as a separate entities with respect say to the what you call the Indian banking system. They should be also brought under the purview of the RBI and also under the purview of the Indian financial system. Next is the other committee recommendations. Of the other committees, the important committee is the MS Verma committee, where the MS Verma committee has strongly advised the restructuring of the big banks, and the Damodaran committee has recommended that the customer services particularly very important in the light of the entry of the private banks, in the light of the entry of the foreign banks. The Damodaran committee has strongly recommended customer services should be mainly improved. Then the Khandeval committee strongly has made nearly 105 recommendations, mainly with regards to the recruitment of the manpower, and it has said that every bank should have a comprehensive human resource development and the human resource policy for each bank separately instead of recruiting everybody. So, and besides these committees, there are also a number of committees have been formed with respect to the banking sector reforms. The important committees are YV Reddy committee with respect to the small savings reforms, SS Kohli rehabilitation of the sick units, and the willful defaulters they should be punished, the committee called SS Kohli, and the Khan committee say the clarifications of the NPS, Mitra committee with respect to the frauds, Chalpatrao committee restructuring of the RRBs, regional rural banks, then AS Ganguly corporate governance, Vijay Kelkar tax structure rationalization, and Rakesh Mohan committee hitherto levied on the infrastructure committee, now it is on the small savings and the interest rates, and the Vyas committee credit flow to the agriculture and leaders sectors besides these committees. So Vyas committee or the Damodaran committee, Khandeval committee, MS Verma committee, Narasimhan committee 1, Narasimhan committee 2, like that there are number of committees are formed in the banking sector to revitalize the banking and financial sector after the Indian economic reforms, particularly after the 1991. Then the committees with respect to the SS Gupta money lending and enforcement machinery and assisting the distressed farmer SS John committee, Rangarajan committee namely the financial inclusion, taking the excluded people or the small and marginal sector, bringing them into the banking fold, and taking the banking services set to their doorsteps is one of the part of the financial inclusion. Deepak Mohanty committee with respect to the base rate. So base rate is the rate at which the banking institutions cannot lend above this base rate. Then Khandeval committee, as I told you, HR. Malegaon is the microfinancial institutions. As I told you, with respect to say to the fall in the cooperative sector and the reforms in the banking sector, particularly after the economic reforms, there is a rise of the microfinance institutions who are providing the micro credit say to the each and every farmer with respect say to the various people, but their rate of interest and their mode of collection is most worrying factor. Though they are helping, but the other ways is very much worrying say to the government and the farmers, and he said that there is an every need to reform the microfinance and the microcredit institutions in India. That is one of the recommendations made by the YH Malegaon. Then Damodaran Committee Customer Services and Nair Committee PLR Priority Sector Lending, which needs to be revised and reviewed. And Mahapatra restructuring of the banking advances, and particularly this committee, namely the Chakravarti Committee on the rehabilitation of the Sikh industries, finance and other aspects. So these are the important committees where the banking sector has done. Then the other important developments are the Basel Accord, where says worldwide it is implemented in 1000 countries. Basel is a place in the Switzerland where it is the group of the finance ministers have endorsed these rules, where the banking and the financial system should be made strong, particularly with respect to the developing nations. The Basel I Accord, Basel II and the Basel III, which we will discuss very shortly. And besides these economic reform, banking sector reforms, as a part of that, the debt recovery tribunals were formed. So this government of India has passed an act, the Debt Recovery Tribunal Act, and established the 6 important special tribunals in many areas. See, recovery of the loan is the biggest problem in the banking sector, and for that some judiciary elements or the judiciary important aspects are to be introduced, and the recovery of such a the debt should not be take long time. So keeping all these things in mind, debt recovery tribunals were made, and these tribunals, the next important the appellate authority is only the Supreme Court. Likewise, these courts are given the priorities. Then securitization and reconstruction of the financial assets and enforcement of the Security Interest Act 2002, popularly known as the SARFAESI Act, was introduced to realize their dues without intervention of the court and the tribunals, private tribunals, industrial tribunals, other tribunals, without their interest and without the problem of the other appellates. The Act has empowered the bank to recollect the lended amount as a powerful instrument. The Act will also enable asset management companies, as I told you, and to acquire NPS of the banks and to collect the NPS from the defaulters. And defaulters has to first deposit 75% of the amount claimed by the bank, and then only they can go for the arbitration. NPS, with these reforms, NPS have been declined comfortably, and from the 80,060 crores to the 51,820 crores. Then the other banking ombudsman scheme, as I told you, in the light of the in the light of the private banks and the foreign banks intervention, customer service and personal banking is the most important aspect. Eyeing on this aspect, the government of India has introduced the banking ombudsman scheme in the 1995 to address the complaints of the bank customers, and 15 such ombudsmen were established, including all banks, cooperatives, the commercial banks and other banks. Then there is an IT use of the information technology and services was also made the part of the system, namely the transfer of the money in the form of the RTGS, real-time gross settlement, NEFT, National Electronic Fund Transfer. Here the difference is, while with respect to the RTGS, which is the real-time gross settlement, the minimum element required is 2 lakhs. Such minimum amount requirement is not there. And IFSC code is strictly implemented while transforming the funds, which is 11-digit code, where the first 4 digits will implies the bank, last 6 the branch, and the 5th digit should be always 0. And for the faster flow of the funds, check truncating system, where the prevention of the physical movement of the check was eliminated, and due to which the number of days can be reduced in the checkable transactions. And mostly the other important banks with respect to the in India, we have to know in the number of examinations, particularly in the POs and the clerks, the punchline of the bank and the headquarter of the bank and where it is located are repeatedly asked in the examinations. Keeping those things in mind, now we will switch over to that topic. Nationalized banks, United Bank of India with headquarters at Kolkata, founded in 1950, and the punchline is the bank that begins with U. And the Union Bank of India with its headquarters at Mumbai, and the punchline is good people to bank with UCO Bank, and headquarters is at Calcutta. The Allahabad Bank, the tradition of trust is the punchline, founded in the 1865, one of the boldest banks in India with its headquarters at Kolkata. And the Andhra Bank with headquarters at Hyderabad 1923 founded. It is the nationalization. Much more to do with you focus. So it's the punchline. And the Bank of Baroda founded in 1908, nationalized in the first phase of nationalization. And the Bank of India with this what you call the punchline relationship beyond banking is the one of the important punchline. Bank of Maharashtra with its headquarters Pune, and the punchline is one family one bank. Canara Bank headquarters Bangalore, founded in 1906, serving to grow to serve is the another important punchline. Central Bank of India, build a better life around us, nationalized in the first phase of with the headquarters of the Mumbai. So in the examination, 4 aspects are important with respect to the general questions. Firstly, when it was nationalized, whether in the first phase or the second phase, when it was founded, what are the headquarters and what is its tagline. Then the corporation banks, prosperity for all is the important slogan, and with respect to the Dena Bank, trusted family bank is the punchline. And the Indian Bank, taking banking technology to the common man and your technology friendly bank. IOB, which is the Indian Overseas Bank, nationalized in the first phase, good people to grow with is the tagline. Oriental Bank of Commerce, one of the important profitable banks, where the punchline is every individual is committed to serve the public. And Punjab and Sindh Bank, headquarters at New Delhi, where service is a way of life, say for the Punjab and Sindh Bank. Punjab National Bank, which is the most important profitable bank in India, having the largest number of branches after SBI and Canara Bank. So it is having the name you can bank upon is the punchline. Syndicate Bank, trust. With the trust, they have made a tagline called the a faithful and friendly financial partner. Then the Vijaya Bank, where this is also a friend you can bank upon, and IDBI, banking for all, not just for big boys. Aavo Soch Bada is the important tagline. And Bharatiya Mahila Bank, which is recently formed, so and still it has to have the tagline. So friends, in this class we have been discussing the important of the structure of Indian banking, structure of banking in India, various types of the banks and the various financial institutions related to the banking system or as a part of the banking system. And besides those, we have also discussed the important banking sector reforms and various banks and this era. So only the keeping the examination point of view, what are the important questions and the areas, not beating around the bush, and we what you call discussed not in a such a manner that not a word more and not a sentence more. Okay.